Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday morning edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, as always, joined by our traders, Joel Elconin and Dennis Dick. On the show today, we've got recap Friday's action. We'll talk about the big news of the morning, mostly GE's big plan today. They're cutting their dividend this morning. We know that much already. Alibaba and JD.com both crushed it with their singles days. We'll talk about that and potential merger Monday with Hasbro and Mattel. Our guest today will be at 8:35. He is a CNBC contributor and the founder of tradinganalysis.com. It's Todd Gordon. He would join us and talk some of his trades at 8:35. Joel, how's it going this morning in the markets?
We are seeing some red. Got a little pop off the 6 p.m. open. Just missed Friday's high of 85.75, going to 84.50. On the downside, it's Friday's low, 71.5. We hit 71.25. So big low, need to hold that. Mid-range on the day, we're looking at 78.75. Crude continues to flirt with the $57 level. Got some closes above it last week, but now below it. We'll see. I think you got 2 or 3 highs right around 57, 55, 57.92, the high of the move. Couple resting on yesterday's low too. Gold up $4 at 1278.30. Silver back under 17 at 1687.5. Dennis, how are you doing on this Monday morning?
Tired.
Tired? Why are you tired?
One of those weekends. Yeah, boy, has been having trouble sleeping there. Maybe going through some night terrors or something. I don't know what it was last night, but it was one of those nights, Joel. You know, when you got 3-year-olds and 6-month-olds, sleep is a luxury that I often don't have.
All right. Well, get them.
Plus, I like to trade early too, and that's a bad combination.
All right. Well, we got a lot of really good news over the weekend.
What's the good news? Give me the good news.
Good news. Good news.
Lions pulled it out against the Browns.
Right.
That was scary, but it was good news.
We could talk. Well, if you want to go from the sports end, I guess if there's one team in the state had a victory this weekend, but the other one got lit up like a Christmas tree. But we'll see. We'll see what happens. Michigan has a big game against Wisconsin next week, and I'm a little bit nervous about that. But I guess if you're owner of Alibaba, you want to recap Singles Day. I mean, they hit it out of the park with $25 billion? You said, Spencer.
$25 billion. The last year was $17.3 billion, and this year they did 25. They did. I think I read it was $1.5 billion in the first 3 minutes of their official sale. So Alibaba rules, and JD.com, don't sleep on them either. Their Singles Day event was a little bit longer. It was actually an 11-day event, but they also, and they have earnings today. But
they have earnings.
But yes, they have.
Are the earnings out on JD?
Yes, they are.
Let's give us the JD earnings report too. Then we'll break down Baba and JD together.
All right, 23 cents versus 10-cent estimate revenue of 12.6 versus 12.57 billion dollars. So a beat on the revenue and a beat on the EPS for JD, and their earnings day was also I forget, I don't have the exact number in front of me, but it was also a ridiculous amount of money for Singles Day.
Why does everybody buy? Is there huge sales? Is this like,
yes,
it's Black Friday or something online?
It's Prime Day meets Black Friday, but times 10.
All right, so obviously huge day for both these companies there. And Alibaba, let's just go to that one first here too, and then we can break down the JD.com trading as well. It was getting a lift ahead of this on Friday night there ahead of the report. We've been saying, maybe there's that trade to buy Baba ahead of Singles Day. I think it would have worked here again. Baba looks like it was up, and obviously it's up here again after Singles Day as well. Got a lot of resistance forming up, near the 190 area. But what are your thoughts here, Baba? I know I'm still bullish long term.
Just got a pop off that 4 o'clock open. So you would have to get up early if you want to get the maximum price. Because at
what was the price at 4
a.m. Opening price 88.50. Then it hit 89.80, and now we've given back a couple bucks here. So 189.80 is your pre-market high. That's quite a bit under the all-time high. The all-time high, which was made on November 2nd, was 91.22. And actually, that's the only high you've had in the 90 handle, 190 handle, that is. So keep an eye on that pre-market high, all-time high, 191.82. And I think a better number, if you're a little bit of a longer-term trader, let's see if you could close under that all-time closing high of 188.51. And that was on Wednesday.
It's interesting sometimes you point out, and everybody would automatically think to the all-time high as the big number, 190, 122. But I know you like to look on a closing basis, Joel, and that's why you're just giving that all-time high close on BABA, which is obviously significantly off where the all-time high is, which was intraday. Why do you look at the closing highs?
Because that's where the big boys are marked. I mean, if they want to get out of that, or big boys, and I think I'd look at that, on my stuff too, is that what's the price you could get out? 190, 122. If you want that to be your target price, I mean, you're going to need a lot of stock to trade there. You're going to have to show some size. But if what you're interested in is, maximizing it at the end of the day, the closing basis, then I use the all-time closing high. It's a much easier number. You could have got a lot more stock off at 188.51 on the day on that Wednesday than you could at that 191.22. So that's the mark.
That's a great point. And, and I agree with you completely on this. And I think, it's a lot of things that maybe some technical traders and, and maybe even other traders that are looking, just at highs and lows and close. Maybe some of the high-low traders miss that when they don't look at the closes and incorporate that into their trading because, it could be 100 shares, a trade at 91, 191.22. The closing print on Alibaba is a significant event. We've talked about it before. That's where all the institutions like to trade. They like to trade on the close. And a lot of times you'll see at least a few 100,000 shares trade on that opening tick. So there's definitely a few traders who are marked from those closes. So I agree with you. I think it's a big part that a lot of technical traders miss is looking at those closing trades.
And actually, let me stand corrected. That pre-market high of 189.80, that coincides with the closest time you got to 190, and that was on Tuesday at 189.86. So there you go. Sellers kind of bunching up here ahead of 190. Maybe
let's go over to JD Spinner talking about it, that they did blow away the earnings, which we just gave you, but significantly off the highs here now. JD giving some of it back. I mean, it was up, Spinner saying it was up over 6%. It's now up only just about 1% here in the pre-market. So JD.com, actually, it's up 1.5% now. Leaking here, Ben, the pre-market, despite a great report.
All right, let's take a look at a big 43.30, and now you've come all the way back down into the 40 handle here. But let me go to the daily charts, and nope, not an all-time high, but what do you got in the 43 handle? Not much until you go back to 43.96. So that's not really relevant. Coming back on its downside, now you want to find some support in this thing, and you are still above the close here. The close was 40.65. I'm sorry, the close from Friday was 39.96. So keep an eye on the close. As long as you stay green, stay above $40, you have some chance to go back up there and test some of those highs. The recent high of the move was 40, right under 41. I see a high 40.77. So it's trying. I just don't like it giving back so much.
What is the difference? What are they selling different, Spencer? JD.com versus Baba. What are they selling that's so different? Because, you look at these two companies, and really Alibaba has been a monster here for a while. And JD.com is, still significantly off of its all-time high, which was up at $48.99 back in the summer. It's a big difference here between these two companies and what they're selling. Do you know?
I don't think there is that much of a difference. I think Alibaba is just a larger version of JD. I'm not an expert. I'm not an authority on this, but based on my readings, JD is just a smaller version of Alibaba.
Yeah, because I look at this, and obviously I go to the website, and it's pretty meaningless because it's all in Chinese. So I can't even determine. I guess I could look at some pictures, but just they look like the same thing. So, maybe Baba is just, you're competing against the best. I'm not sure what it is, but Is there a comparable over here? Like, I mean, we have Amazon, is our comparable to Alibaba. Do we have a comparable to JD? Like,
so actually here, and I'm just remembering this. Here's my understanding of how they differ.
Sure.
JD, I think, is more like, in terms of the business model, is more like Amazon. Alibaba, I think, is a little bit more like eBay. Does that make sense to you?
So can you, like, individuals are coming on JD.com as well? They can do that on Amazon, obviously, as well. But I mean, a lot of people just throw up their used stuff there, on eBay. I've always thought eBay is kind of like your online, like, just place to go when you want to sell your used, boat. And you don't see that on Amazon. Is that, like, they sound like a lot of used stuff there, maybe? Is that what you're thinking?
Yeah. I mean, I think you can buy anything. I think that's kind of the point.
Okay.
But that's in terms of, like, how, like, eBay is more, a lot of one-off stuff, right? Amazon, you get a lot of product lines, but that's how they differ. Really, is one is the eBay, one is Amazon of China, and also, of course, there's more to it than just that's the core business. But of course, they have an entire portfolio of investments that they're both in. They're all invested in self-driving in China and social media and Weibo and Sina and all that stuff.
Okay. All right. Well, that's a good synopsis here and a summary of these companies here. Joel, what do you think on the technicals, JD.com? It's not been as big of a mover as Alibaba. Is there an opportunity here for it to play catch up? Or are you concerned, which I'm concerned, that, it's leaking on a pretty good earnings report?
It is. And, we talked about the closes here. I'm just going to go a little bit longer term. I'm just going to look at this $40 level. Your last four closes are between $39.79 and $40.33. Friday's close right there at $39.96. So we're still comfortably above 40. Holds 40. I think you got a chance to go up to the upside. If not, I think you could see parallels right near 39 from from Thursday and Friday. So this 40 area, to me, for the remainder of the week is going to be important to hold.
Let's move away from the earnings reports, and we know we're going to get some other ones, and we're coming into retail earnings this week. But I want to bounce back over to M&A news here, and we kind of got a little bit of a, well, at least rumored merger Monday here. Friday night, it broke that Hasbro is sniffing around. Wall Street Journal breaking an article that they are talking with Mattel and potentially going to make an offer to Mattel. If you look at Mattel, it is your big winner of the day. MAT is trading up 23% here in the pre-market. Interesting, Hasbro also getting a pop on this, so they must love the synergies. $94.50. It's trading up $3 here as well. The troubled toy maker potentially going to get a bid from Hasbro. Thoughts here, as we have this potential merger on the table.
I mean, I don't have are you buying a lot of toys there, Dennis, to support this toy market? I mean, I don't know. I just don't. Hasbro, to me, this is showing a little chink in their armor. I mean, do they need growth? I mean, what products do they have from Barbie dolls or whatever? I don't really get this. And I really don't like either of these companies long-term or short-term. Mattel's getting a pop. He hit 1850 and starting to leak a little bit. Of course, when there's rumors out here and things like that, you got to pay attention to it. But I don't know. Hasbro's getting a pop too. And is it filling the gap from earnings? It hit a pre-market high of 95.35. I don't like it. I don't like this merger. I don't know. Maybe I'm too far out of the toy realm.
It's just a rumor here right now. And I'll tell you, full disclosure, I shorted Mattel Friday night. Up here right around 17, right at these prices, $17.90, so $17 to $18 area. That's where I'm marked from. Reason that I'm coming in here and actually shorting this pop is a couple of reasons. This is my thought. Obviously, you got to analyze and do your own homework and do your own analysis. But first of all, this is just a rumor, and I'm not sure it's going to materialize into anything. And we've had Mattel Hasbro rumors in the past. Spencer, have we not? Because I remember this before. And I'm not sure when this was, but it was quite a while ago because we haven't talked on the show for a while. But I remember hearing these rumors before. So it's not the first time these rumors have surfaced. Now, this Wall Street Journal breaking it, saying that there could, that it looks like there's going to be a bid. So, this is a very credible source, obviously. You don't get much more credible than this. So, maybe, there's definitely smoke here. Question is there fire? So my short thesis is on it is that I don't think there's any other potential bidders. I don't think anybody's running to buy Mattel. There's no other public real toy makers out there, big ones that would really be big enough to scoop up Mattel. You were arguing in the pre-market show, maybe something like an Amazon would come in and buy Mattel. I don't think so, though. Like, I think, there's Hasbro as a potential suitor, and that's it. So if I'm Hasbro, I'm not paying a huge premium for Mattel because why? I don't really need to, overpay because I don't think there's a lot of people coming in here and trying to buy it. So I'm thinking if it even does materialize, I don't know how much higher you're going to get than $18. Maybe you could get to $20 bid, but the stock was trading $14.62. A couple days ago, it was trading almost under $13. So you're talking really from here, 23, 24% premium. That's already a pretty good premium. This market's put a pretty big premium already on this thing. So I just think risk return up here is actually to the short side now because one, if it doesn't materialize, stock could start leaking back. Two, if it does get a bid, I don't know how much higher it is than $18. Maybe it's 20. So maybe, in that case, they do get a bid, it goes to, 1950 or 1980. And if the bid doesn't materialize, and nothing happens with this, I think it starts to leak and it has a potential to go back to where it was. So I like the risk return from a short side up here. I'm not about a half size position for me. So not a huge position here because you're playing, some pretty, stock's going to move around a lot. And there's obviously some high risk, but I just don't know about this one. So that's why I decided to short the top.
Joel, what do the charts tell you from February 4th, 2016? Because that was the day we had a Bloomberg report that Mattel had been approached by Hasbro for a potential.
What was the date on that?
February 4th, 2016.
Man, Dennis, it's pretty good. I usually remember that stuff. And
I looked it up in Pro.
I know, okay. But I because what Dennis was mentioning on the pre-market show, and let me see if I can go back to that. What was the exact date?
February 4th, 2016.
All right, February 4th, 2016. Boom. Going back for a little history here. Where can I find this? 15, 16. Man, you want the Hasbro or you want the Mattel?
The Mattel.
Okay.
What did Mattel do on those rumors?
And this was quickly swatted down a day later by David Faber, said that no talks were going on right now, and that was the last time there was any sort of substantial news on a Hasbro Mattel merger.
It popped. It hit a high on February 4th of 2016, hit a high at 34.36, ended up the day at 32.29. So it ended up.
And it never traded higher than that initial spike.
Correct.
So we have precedence here. Now, that was just rumors. This is more substantial. Maybe there's been more rumors here now. So I don't expect to just turn around and give it all back here. But if for whatever reason, we know sometimes these deals, are tough. And if you're Mattel, maybe you're going to want too much of a premium. I just think there's a possibility that this doesn't go through. Other people in the chat saying maybe antitrust issues. I know you mentioned that too, Joel. I don't know how much you'd have here. Like, Mattel's in a world of hurt. So it'd be pretty tough. But, also, if we just look, Rite Aid was in a world of hurt, too. And we know the antitrust was blocking them there, too. So it might not just be smooth sailing if antitrust. So that being said, if you had a $20 bid, if you think there's antitrust issues, it probably doesn't go much higher than 19. So really, you're only looking at a $1 upside, even if you get a $20 bid. I like it more now. That's a short.
You're really talking yourself.
I was talking myself into double of my position, maybe.
I was thinking, is this not the same thing as Staples Office Depot? The only difference is
they block that too.
The only difference is people actually buy stuff that
you're going to get me to short a stock live on the radio. Here.
No, don't.
Whenever I trade live on the radio, I always get in trouble.
I'm not. I'm not saying anything. I'm just saying people actually buy stuff that buy the things that Office Depot and Staples sell. They just don't buy it at Office Depot and Staples. Does anyone actually buy stuff that Mattel and Hasbro sell? I don't know.
And
the problem is too, and you've made this argument before too, is the kids, and nowadays, like I can see my own kid here. He wants to play with. He's 3 years old. He'd much rather play with his iPad than play with any other toys. He'll play with both, but he prefers the iPad. And I think as the kids get older than 3, it's all about technology. You got these 8, 9-year-olds that are playing with their iPads now. Like, I mean, I see it with all my other friends' kids too. Like those, the biggest competition to these toy makers is Apple.
I have to agree with you on that. And then Jimmy A makes a great point. Rushing out to buy Mattel after Toys R Us goes under.
There's a lot. This company is in a world of hurt right now. And this is like, okay, all of a sudden, I think it's a windfall. It's a windfall for anybody who had this thing long. It's a windfall for anybody who was picking, the bottom here, thing popping up here. If it materializes and they get a bid, great. But if I'm Hasbro, I'm just trying to think, I'm always trying to think myself as, the company that's doing the acquire. I'm Hasbro. Why am I paying $25 or something? You don't need to pay that much. They know it. So I don't think the bid's going to be anything over 20. If it's antitrust, then it's 19 to trade up to. So I got a buck upside. And you got like 3 or 4 or 5 points downside if it doesn't materialize. Because if it doesn't materialize, there's no other bidder out there for Mattel, which I don't think there is. I can give us it back. So, this is a trade. This isn't a real short-term trade. I put it in my swing trading account because this is going to chop around $1 today in either direction. But I want to try to hold this one. So I want to try to hold it because I'm hoping the rumors don't materialize and the thing goes back to where it was.
And the Hasbro longer-term chart, weekly chart here, I mean, that's just not a good-looking chart. You came hard off that 116.20. You did find some support at 90. Now you're getting back, all kinds of resistance just under triple digits. So unless this thing busts out, gets back over 100, I see this thing filling the gap, maybe trading in the lower 80s. And if you go back to the old days when a company was doing an acquisition like that, it got whacked. And now
it's weird. They don't do that right now.
Yeah, now they do it.
They're buying them both lately. Hasbro can get the Star Wars pop. We got the Star Wars movie coming out in a month. Sometimes it is strong ahead of that. So that's one case against the shorts there on Hasbro. I think I'd be selling the Star Wars pop, though. If we do get like a late run, ahead of the Star Wars movie and this thing can get back up over $100 or anything like that, I think I'm a fader of it. I'm a Darth Vader of Hasbro's pops if they get it ahead of the Star Wars.
Gap to fill from last earnings report to Hasbro at 95.40. So that's right near the pre-market high. So we'll see if this thing can get back and hold the 95 handle. We'll see what materializes on it.
Looks like Qualcomm is going to potentially reject the AVGO bid. Spencer, do you have the details on that? Have they actually officially rejected it, or it's just rumors now they're going to reject it?
No, this is a report from Reuters that rejection could come this week. That's all we're saying.
Okay, so it looks like, and what was the price they were giving them? 70?
70. Yep.
So, man, Qualcomm, rejecting that. The thing was at $50. 70 seemed like a pretty good price to me. A stock that's been in the doghouse forever. I tell you something, everybody's going to say, oh, wow, they're rejecting 70. It's worth more than that. Maybe, there's some value in a stock like Qualcomm, but it's also been a value trap for a long time. It's a stock that Apple all of a sudden, isn't going to be selling, or buying some of their, obviously, products. They're cutting them off. They're a stock that's in a little bit of a hurt here, too. So I don't know if I'm jumping here and buying Qualcomm just because they're rejecting and thinking they could get a better price, because that might not materialize either. No position here on Qualcomm, but if you put a gun to my head here, I'm just kind of sitting on my hands here. It's kind of, because you got a potential that they could get a better bid. If they don't, the thing might start to eventually leak.
63.60, a little break there, but you pop back in the 64 handle. Of course, there's a lot of fundamentals going on this, so very hard to, trade it technically. But for me, you got the pop. The street said, no way this has happened. Got nowhere near $70 here. $64. There's pair of lows there from Thursday. You got a trio of lows here, folks. 64.21, 63.93, and 63.92. Those are your last three lows. Absolutely has to hold $64. Chart's telling you all you need to see under 64 here, air down to 62. And then if it really pull the rug out of this thing, goes back from where it started from, folks. Remember, a few trading sessions ago, this thing bounced off $50. So a lot of people still sitting on some profits.
Joel, you made a good call on Friday here on Overstock.com, and we've been on this twice now. I called the first one, when the stock HMNY, I was looking at the chart and saying this could get citroned. And actually 2 hours later that day, Andrew Luff came out and, gave his bearish thesis on HMNY. Well, kind of the same thing happened on Friday. Overstock.com, you were talking about, and you looked at this chart and you're like, you know what? Andrew Luff could be on one of these, and this could be one that he might, he's the bubble buster, and he might be one that might comment here. They commented, actually. They did tweet, so it was a great call by you to, say, but he didn't get full-on bearish.
No.
He just said that we'd be cautious here. So it's interesting. Usually he comes out and says, Overstock way overdone, stocks were $30, and the stock would probably fell 10 points. But he just went cautious. He just said, oh, we're cautious at these prices. He actually credited somebody for making a good long call in that tweet and then, said we're cautious. So not sure what that means. And I'm not sure the market knows what that means either, because they really didn't hit it on that Andrew Leff tweet. I know it went down a couple of bucks, but not the typical collapse that Andrew Leff can make happen. It's trading down $1.15. We know this is getting a big lift off of Bitcoin. Bitcoin had a little bit of a bubble burst there just last week. I know it fell over $1,000, but they're still obviously a lot higher than it was before. What are your thoughts here on OSTK?
It was the reason I was talking about it was if you were playing it from the long side, you could get submarined here. I have no idea what the whole Bitcoin thing is. Actually, Jeff sent me an article, and we had a little debate about Bitcoin last night, and I didn't get to read the article. More merchants, because I was trying to argue him like, what good is your Bitcoin, right? Like, if you want to buy my house, and I don't want Bitcoin. I want
too volatile.
Yeah, it's too volatile. I want cash. And he's like, well, I'm not giving up my Bitcoin. And, we had a 20-minute discussion on it. But for me, for this overstock.com, it still posted an all-time closing high on Friday at 53.15. The previous high was 52.40. So I want to see it back in the 53 handle, barreling up towards 56.10. If not, you have just a ton of air between 49.95. That was Friday's low after Mr. Leff got to it. Then your next low is $6 lower at 43.30. So if I'm hanging on to this thing, I see a 50 print, and I'm waiting for the 49.95 print. I just don't like to see it. I just don't like to see that kind of air in it. And then also I'm looking at, I was just looking at IBM too. Did you see what it's done since that earnings report?
Oh, and you want to know something? I love Cramer. Cramer, is the guy is one of the best people. Just his speaking ability is incredible. I mean, he's funny, he's witty, he's got a great show, and he's got a great following as well. But he was dead wrong on this. Here he was, IBM, he is dogging it. I don't know why lately. I've always one thing with Cramer in the last year is all he does is momentum calls now. He used to always do like some contrarian calls. He seem to have like a more guts. I don't know. Maybe that's, his editors saying, oh, they don't want you talking about these dogs. They want you to talk about the ones that are moving, because everybody on CNBC just talks momentum all the time. So maybe they're, doing it, because Cramer used to always be a contrarian too. And he'd come in as stock was going down and he'd say, I like it here. He even talked about, averaging down sometimes, buy some here. If it comes in more, buy a little bit more. Lately, though, Jim is just doing momentum calls all the time. And it's kind of like, the boat, all of a sudden, IBM, he wasn't liking it at 146. It goes up to 160, 161, 162. 2 shows of mad money. He's like, oh, I love this company now, basically. Saying he loves it up there, 161, 162. Ever since then, it came all the way back down. Now you don't even see him talking about it. So I'm not sure if it's as editors doing it or not. But, me and Joel on this show, we've always kind of been more contrarian. So I see the big pop and I like to fade it. And maybe, that's been a mistake in this momentum market. But, here you got IBM, which is an eternal dog. Has a pretty good earnings report. People buy for 3 or 4 days. It's not out of the woods by any means. And it filled the gap. It's basically filled the gap here now. So now it actually gets interesting to me. I start to look, when stocks fill gaps, and I think, okay, well, maybe, there's some buyers where it had previous resistance before. So actually, I kind of start to like the IBM chart, believe it or not, here, as it fills the gap down to 148, just because I think where we had old resistance before, you might have some support now.
If anything, I just would be bringing in a short here, anywhere in this area after the gap fill. But, these things just do it quietly. It actually went up 2 days after. And boy, oh boy, it hit that resistance from February too, and then came back down. But sorry about that little tangent there. I was just, talking about stocks with air in there and wanted to get IBM in there.
IBM had some air and it filled it. So stocks can fill gaps when they start to get into those gap areas. They do tend to fill them, and IBM did. So it's nice to bring up these charts sometimes, though, just because there's opportunities when a stock fills a gap as well. Jump over to General Electric here, a stock that I've been kind of bullish while, not bullish really in my long-term account, even though it's in there. But the last 3 or 4 days, I've been saying the GE looks like it's turned. And I'm still going to keep saying it. At bottom, it did the shakeout below $20 there in 1963. Hit, everybody that wanted to get out and said this was going to be a teeny bopper stock, and it was. It only stayed down there briefly, and it's basically now recaptured 20. Now it's up to $20.60. Well, now today is going to be very interesting and be a very volatile day for GE. So if you're trading this, be aware that they are they calling this an Investors Day? What are they calling this, Spencer?
I don't know if it's a formal Investor Day, but today's the day that the CEO, John Flannery, has pegged as the day where he's presenting investors and analysts with his plan to turn around the company and invest in certain things and divest themselves of other things. So today is that day.
I think they're going to cut. They're saying it's on the table. Everybody's talking, but I think they probably maybe do cut the dividend here today.
Oh no, that's
they already did.
That's happening.
They cut it in half.
They cut it in half. It's now 12
Oh, they did cut it already.
It's now 12 cents. Yep.
When did they do that?
That was.
How did I miss that?
That was this morning. I don't know.
How did I miss that news?
You were maybe changing a diaper or something.
You're trading Bitcoin.
No, yeah.
They did slash it. Okay, 50%. No, it was 8. What time was this at?
I got 6:30.
6:31 this morning.
Yep.
All right. Well, I was speculating. Well, okay, it happened. I don't know how I missed that. Fuzzy says, "Wow, wake up!" It's been a busy day for me. I've been trying to set up my whole office here. I was up at my cottage here and trying to reset everything up. It's been a busy day, so I don't know how the hell I missed that. But anyways, I was right with the speculation of it because it actually happened. So
we're leaking
I was
a little bit.
Say if it pulls back, I was going to buy the pullback on this. I don't know why they did it at 6:30 in the morning when I wasn't paying attention. What did it do this morning?
It got up to $20.99. It got up to 20.
It rallied initially on it. Just rallied immediately when they did that.
Yep. Actually, $20.98 was the pop that you got. In General Electric, it did that 7:15 this morning. So that was a little bit after the initial news came out here. Nice whole number, right? 21, 20.98. The institutions were there. That takes you back to really no highs at 21 now because you had 20.72 and 21.30. So keep an eye. We're just haven't taken out the 20.72 as of right now. Just be aware the pre-market high is 20.98. And if you have a New York open book, could be some size there. I want to ask you, is there an imbalance in GE today?
Let's go look. Actually, they just came out here at 8:30. So it's 8:32. 44,000 to sell. So it's very early. That's very small.
Okay.
So that's hard to really justify, or hard to say that's anything significant at all. 44,000 is basically nothing. Gee, it's already traded 1.1 million shares. It's gonna trade a ton of stock. Let's see what it does today. Let's see what it does when the real money comes in. I mean, if they start to leak, if it starts to go through settlement, I'd be concerned. I don't want it down trading through the red here. If it can hold on and start to, get back up to those highs, it becomes interesting again too. But this is the day. This is the day you need to really pay attention here on GE. Friday's low is 1990. Absolutely needs to hold down. I mean, that's where all your major support is. It's going to be interesting to see what happens once the real liquidity comes in because this thing's going to trade a ton of stock today.
According to the Journal, this morning late last night or early this morning, they're going to focus on 3 divisions: aviation, power, and healthcare, and they're going to pull back on everything else. That includes transportation, that includes lighting, that includes everything else that's not healthcare.
Oil too, they're pulling back on.
This is from the Journal this morning. This is what they expect. This is what they are reporting.
Man, that Baker Hughes purchase just put a dart right through the heart of them. Because they're not even talking about oil, and they have that big Baker Hughes purchase.
They're getting out of it, Dennis. Yep. They're getting out of that.
That was just a terrible purchase. When did they make that purchase, Baker Hughes?
Ooh, I don't know. Let me look at. I don't even remember off the top of my head.
I'm just trying to. I think it was like a year ago. It wasn't that long ago.
I want to say it was late 2016, but
So here you are a year later, and they're looking already. It's already went south. Everybody knew oil is in trouble. Everybody knew. Now that oil's starting to come back up, now you're going to divest it. Man, this company does a lot of things wrong. They're looking. Their guidance is out too for 2018. A lot of headlines just breaking here too on GE, and they just broke guidance headlines $1 to $1.07, and estimates are up at $1.18. So they're looking light on the guidance too. But I think everybody expecting disasters. They kept half the dividend. I really want to see what happens at 9:30 because once the real liquidity comes in, this thing's gonna we'll have a lot more price discovery than we do in the pre-market.
It was October 31st of last year
So a year ago they buy Baker Hughes or the assets of Baker Hughes, and now they don't even care about it. Wow, man, there's some bad people, running this
Not
company.
bad people, just bad judgments.
Bad judgment.
They're good people, Dennis. Come on.
Good people
nice
with
people.
bad judgment.
Right.
The only reason I'm mad because I've had my investment portfolio for 17 years and it's been maybe nothing. So besides a dividend, which I got, which was okay, this has been a dog of an investment. General Electric, not loving that company over the last 17 years.
All right, well, you keep lamenting that, and we're going to take a break and grab our guest for the day, Todd Gordon. He's a CNBC contributor and also the founder of tradinganalysis.com. We're going to hopefully show some charts of his. We'll be right back with Todd. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line with Todd Gordon. He is the founder of tradinganalysis.com, CNBC contributor as well. Todd, how's it going today?
Good, Spence. How you doing, man?
Doing well, doing well. Show us what we're looking at right now.
Yeah, just kind of putting this crazy bull market in context and just kind of figure out, where we are in terms of volatility. Everyone's talking about the VIX, and something that I came up with that I thought was pretty interesting is everyone knows the VIX is low, but there's another indicator that I'll show you here, which is called average true range, which is basically just high to low range of a given market over X amount of periods. So we're looking at a 14-period ATR. But this one, what it does is it makes it a percent. So a percent high to low over the last 14 periods. And what you'll see, basically, I'll make a long story short. If you go all the way back in the Dow, just to give you this context, to 1905, you will see that the current reading, just about 4% on average, which is way over here on the right side of the chart, is the lowest it's been in over a century. So we're talking like there's a low reading here in 1915, another one in 1954, 65, post, bull market rallies. But right now, the Dow is trading the tightest in terms of a percent high to low over the last 14 periods in over a century. That doesn't mean sell the market right now, but if you thought this market is quiet, there's the proof.
That is a very interesting chart that I hadn't ever looked at before. So thank you for sharing that.
Yeah.
What else are you looking at right now?
I'm just, like I said, I'm trying to respect this amazing uptrend. I'm focusing in a lot on the bond market too. I think interest rates are really going to be kind of the key to coming volatility. And one thing that I'll continue on this. The periods, and I could pull this apart and give you a little bit more detailed analysis, but the indication that a top in the market's finally coming is usually preceded by about a year of increasing APTR, average percent true range. So because we're at such a low level right now, it doesn't mean sell the market. In all instances, 1929, 1987, 2000, and 2007, you saw about a year of increasing range. Then the top will come in. So I think we're going to have probably another year of rally, and we need something that I think will start to increase the range, start to bring some volatility in the market, even with a continued uptrend. Oh, sorry, I got to turn my notifications off. So I'm wondering if it's the bonds that are finally, and interest rates moving up, that are finally going to start to bring some volatility in this market. One other kind of long-term chart that I'll put in front of you is this is the 30-year bond in white, going all the way back to when I was in diapers. So 1980. You can see in white, that's the 30-year bond. We're kind of scraping along the upper channel here in 30-year bonds. And what I'm worried about is, are we coming to a point where this 30-year uptrend in bonds is going to start to drop? Interest rates are finally going to start to go up. And one thing I'd put in front of you guys is take a look at this S&P 500 overlaid on the 30-year bonds. If you went to a room and said, guys, raise your hands, who thinks stocks and bonds are inversely correlated? Probably 61.8% of the room would put their hand up and say yes. But if you look at this, I see a pretty good correlation of stocks and bonds. There's two instances where they're inversely correlated, 2000 and 2007. So if the bond market starts to drop, if the bonds start to go down, yields finally start to go up, I think that's going to be the thing that inserts volatility into the stock market. And that's what'll start to begin to put this topping formation into place. Just my long-term thesis.
Todd, if you're saying interest rates are, potentially going up here, and, I think they can go up slightly. I don't know how much they can go up, just because I think we're still a society that is built so much on debt, where I don't think we're ever seeing 8, 9, 10% interest rates here again.
Us, wouldn't it?
Yeah, I think it's just, I think the Fed's always going to do as much they can do to keep interest rates, reasonably low. But, if we are going up, let's say, 0.25%, 0.5%, maybe even a 1% from where we currently are, does that make you bullish these financials?
Absolutely. And financials are one of the focus sectors that I'm looking at. I really do like the XLF. It's pulling back into a nice little wave for support here. And let me just go back before I go into financials.
Sure.
Spencer, I'm preemptively saying if we break this 3-decade uptrend, we have not broken it yet. And, Jerome Powell, I'm doing some reading up on him. He seems to be a guy who can reach across the aisle and seems to be able to work with multiple people, but he definitely is leaning a little bit more towards the right side of the political spectrum. So I don't know. We'll see what's going to happen there. We'll see what his tenure is, but we're talking the next 2 to 3 to 4 years is when we'll have a resolution here. But in the near term, yeah, I do like the financials. I think XLF looks good. I think I'm going to put some money to work in JP Morgan this morning. JP's looking good. I think Bank of America is looking pretty good. I think that's where it is. There's a few big cap techs that are continuing to push ahead. Google's looking good. Facebook's looking good. Apple's looking good. Seems to be that and financials are where we are right now. But it's like a weird time of a market. This is the fewest amount of positions that I've carried in a long time. I'm doing more watching here, and it's kind of making me nervous just kind of watching what's happening. But it feels like the market's trying to jockey for position a little bit. And I don't know. I don't have a great feeling where the market is right now, to be completely straightforward with you.
Todd, how do you define a trend reversal? Is it on a closing basis? Is it on a weekly basis, monthly basis?
That's a great question, man. I'm a big believer in the Elliott wave theory. And this is a way that I get context as to where we are. So I'll follow this model, and let me just throw up the S&P here for you. I'll follow the S&P model or the Elliott wave model to say, here's where resistance will start to come in. So the way I'm looking at this, I have it right here. I've got some near-term targets, 2611, 2639. Basically, if you go through the catalog of patterns as given to you by Elliott, it gives you context as to where you are. I do think we're in a longer-term third wave. At some point between 2600, 2700, maybe even 28, this wave 4 will come in. It won't be the end of the world. It'll be a couple 100-point drop. But for now, I'll use the Elliott wave model just to kind of give you context as to where we are.
Todd, a question from our chat right now. Do you have any short or long ideas in the event that this trend finally does reverse and the market does finally go down?
So what am I going to do if we finally do start to get that reversal?
Yes.
For me, guys, I've always found that, I love trading volatile markets. And you guys have been in the business a long time. You know what's up. When a market turns volatile, when you finally get that range expansion, it's night and day, especially compared to what we've seen here. This trading is for the birds, right? I mean, you can just buy and hold and make some money. It's great. But when volatility starts to really expand, reversals come in, everything falls. So for me, when you do get vol expansion, I just like trading the indexes because, they're moving plenty. There's plenty of liquidity. I like to trade the index options and stuff like that. I'll just trade the S&P. If you want to trade the S&P futures, that's fine. I just find it's easier just to focus on that because when this falls, everything falls. So I just keep it simple.
That is,
I completely agree with you there on, the trading side of it. And I've been prop trader for 18 years here now.
Yeah.
And, I can look at our guys, we got about 100 guys at Bright Trading there. And, it's tough. It's tough in this environment.
I forgot you were at Bright Trading.
Yeah, I'm at Bright. So I've been there. Yeah, I've been Bright 1999. Joel was originally Bright Trading too. That's where I met Joel, back in the Detroit office, 1999.
Don Bright, and what was his brother's name?
Bob's the one. Yeah, Bob and Don. And Don passed away a few years ago.
Yeah, I knew that.
Great guy, a lot of strategies, just a great prop trader. And Bob's still one of the best traders in the world. Huge trader, and Bob's still doing a good job there too. But so that's a little history of Bright Trading there. But I can tell you, from trading perspective, a lot of our guys, are doing stat arb. We're doing a lot of inefficiency trading.
Yeah.
When the VIX is down at 9 or 10, the inefficiencies are simply not there. I mean, you're trying to look, to where you can pick up, an edge. It's hard. It's hard to find an edge when the VIX is sitting at 9 or 10. When that VIX was kicking up at 60 and 70 back in the financial crisis, that was all their traders' best years. And it's because everything is just everywhere, and nobody's, making any consideration when they're hitting the buy and the sell button. A lot of dumb money just flying around every which way.
And the emotions go crazy. And I want to ask you, like the dumb money, yeah, but even if it's algos and robots trading, whatever, the emotions are built into that. But that's when technicals work best. And obviously, I follow the fundamentals. I love intermarket analysis, but when emotion and volatility kicks up, man, that changes everything. Would you say predominantly the Benzinga audience are they trading? Are they holding positions for months on end? Are they more in the investing times? Where do you think the demo falls in?
Let's ask the chat that question. And we've got, about 50 people in the chat there, kicking around here that listen and, to pipe in, are you guys longer term? I think a lot of our guys are regular chat listeners or more traders there.
They're
I think we have
more active.
Yeah, I think so. I think we have a lot of traders, and I think we have a lot of, I think a lot of our listeners too. I think we have some buy and hold listeners too. So I think we have a mix. Spencer, when you say the same thing, I think our audience is probably a mix of that.
Yeah, my best interpretation of the show and then the Benzinga Pro audience is people who are actively managing their portfolios. They're trading or they're actively managing their investment portfolios. So
there's not a lot of people just buying and holding a stock.
No, I wouldn't say that.
Active traders and a mix of, there's some. But there's a lot of swing traders. I think they're in there too, Todd.
Okay.
People trading and holding for a couple of weeks at a time. But a lot of day traders there too.
The result of this market being so quiet and being such a trendy market, I think everyone's kind of getting pushed into that time frame. Like for me, I started as a prop trader in San Diego, and I was working with guys who were trained under Bright. And one of the truest things that I learned on a trading time frame is you're going to make between 70 and 80% of your money during 20, 30% of the time. And those are volatile times. I've traded through 2000 and 2007, trading for a hedge fund, and volatility was insane. I was down on the 1 in 5 minute chart. So the reason I was asking is if and when, and it will be when volatility finally returns, don't get stuck on, if you're trading a 2 hour chart in a 9 VIX environment, don't get stuck there. When ranges expand, you're going to go down on a 15 minute chart and a 5 minute chart, because all of a sudden you're going to be seeing 30 handle moves in the S&P. So just adjust whenever it comes. I don't know when it's going to come, but for those of you who are trading, it's totally different when volatility comes back.
I mean, our traders at Bright have had that adjustment problems in itself. We come from, environments where, we're trading the financial crisis. Even to 2011, we really had some volatility there. And then, obviously it's fallen apart in the last 4 or 5 years. And a lot of traders have had difficulty adjusting that environment. And sometimes, you just got to take what the market gives you. I will tell you, from my experience and, seeing our traders, there's definitely a positive correlation between profits and VIX. As the VIX goes higher, there's going to be more movement, so there's more money. So what some of our traders struggle with is they're like, oh, I'm making so much less than I was 4 or 5 years ago. And they take that upon themselves saying, I'm getting worse. I'm not as good of a trader as I used to be. And I try to tell them that's not the case.
It's not the case.
It's the VIX. It's the market, what it gives you. I mean, when you have 30 handle moves and now you have a 3 handle move, I mean, the opportunity is just not there. I'm making much less money than I was back in 2009, 2010 as well. Yeah. But I don't think it's my trading skill set. I think it's just the fact that the VIX is a lot lower.
Absolutely. It's just what the market affords you. And that's why I run my trading business, and I try to structure, I run a trade advisory business, and I trade my own money. And I never try to bring people and say, you can trade for a living, because you're obviously properly equipped and you understand your capital and you have the time to do it. this is a time where you could go a month or 2 or 3 months without making any money. But if we can catch, a couple good periods, then, that's going to add up to the end of the year, your good results at the end of the year. So like, don't try to come in and try to trade and say, I need to make X amount of money every single month. I mean, sometimes you're going to make nothing. Sometimes you're going to lose money. And then other months you're going to kill it. Right. And that's just a reality of trading.
Just some comments here. Texas Linda, I know she does some longer term investing. She's thanking Dennis. We've been talking about G a lot lately. But Todd, before I let you go, I gotta ask you about Bitcoin here. And
I was just gonna bring it up.
Okay, go ahead. I'd love to hear your take on it.
So I was long, and I'm still showing screens.
No, you're not.
Oh, I'm not. Okay. I was going to bring up charts.
Can we show the screen?
Can we do it, Spencer?
Sure.
Yeah, there we go.
Okay, we got
cool.
it. We got you up there.
Is okay? Should I show these charts? No problem.
Yeah, sure. Go ahead.
Yeah, we got it.
Okay. So again, and Bitcoin is one. I've been trading a lot of Bitcoin. And you want to talk about volatility? Oh my goodness! Like, I first started trading Bitcoin. I still have some from 2015. I bought some at $330 and I still have some. So I've been trading in and out, and I'm just tracking the Elliott wave patterns here in Bitcoin, and it's wonderful. I was looking for a move up to about 8,000. I took off half of my position. I did that live last week. I'm looking to establish more. I think there's going to be kind of a wave for consolidation over the next couple weeks. And then at that point, I think we're going to get, this little Roman numeral 5. I think we're going to get one more push up to around 10,000. So my goal here is to hang out for a couple weeks, let the wave 4 consolidate, which they tend to do, pick up some around here, and then try to get the final move up to about 10,000. At that point, I think you're going to see a pretty good sell-off. Like Elliott, we're talking about volatility and emotion driving the market. That's all Elliott does, is it just uncovers the emotions and the fear and the greed and crowd mentality that drives prices. And Bitcoin is such an emotional market. It traces beautiful patterns. So could be right, could be wrong. But for me, it's like I have a game plan. And if I'm right, I'll make money. If I get stopped out, I'm going to contain the risk.
Are you just basing it off the technical patterns here? Do you see an economic value to it? I mean, they're going to start trading futures on it.
Joel, they're talking about the valuation of Bitcoin being the transactional volume, and they're showing that that's starting to diverge. I mean, I don't have enough time in the day to really get inside the fundamentals of Bitcoin, and there's some smart dudes in there trying to pull this apart. I have to ask my friend Brian Kelly from CNBC. He'll know more than I will, but I'm mostly going off the technicals because it's such an emotional market. And you guys know when volatility and things are really moving, emotions are driving. I kind of set the emotions, I set the fundamentals aside and just focus in on what's going on the maps.
All right. Todd Gordon, tradinganalysis.com is his site. He's also a CNBC contributor where you can see him on, what shows are you on, Todd? Are you on Fast Money, Halftime Report?
Yeah, they're bouncing me around. I don't have one show right now. They're bouncing me around. I've been doing Trading Nation a lot. I've been doing Squawk Box and Fast Money in the technicals. So I'm a rotational player.
All right. Well, you can see him there or on tradinganalysis.com. Todd, thanks so much for the time today. Really, really appreciate it. Love the charts as always. Have a good one.
Thanks, guys. You too. Talk to you soon.
Thanks, Todd.
All right.
Got another little pop here. Back above 21, Dennis. There's a seller at 21 here. Did you get any of that piece, Dennis, when it popped to 2106?
No, I should have been out there. And maybe it was because, the guidance came out, it got a little pop. It does look like there's overhead supply in G. That's going to be its biggest hurdle no matter what. I mean, there's so many people, even like myself, my investment portfolio, that are underwater. And like you said, we're coming towards the end of the year, tax loss selling could come into play here. A lot of reasons here, that GE, I don't know, is going to be a huge bounce back, but I'm still want to wait until the real liquidity comes in. See, I think you can have a good day trading event with it here today. I mean, a lot of volatility, intraday volatility in GE as it's digesting all this news that just came out with, but long term, still a lot of overhead supply in a stock like GE.
All right.
Jump over here. Other
Go
news,
ahead.
Qualcomm just broke here about 2 minutes ago, officially does reject the AVGO bid. It got hit on it initially. Now it's actually coming back a little bit here as well. They were citing that the company, the proposal dramatically undervalues the company. So Qualcomm says no to Broadcom there. AVGO is trading, hasn't even traded at all on this. It's actually offered down to 264, but that might be more with fair value. Qualcomm bouncing around a lot right now. Went down to the 63 handle and just bounced back up into the higher 64. So really bouncing around here, QCOM.
Yeah, and still that $64 level. There is a buyer persisting there. You see the spike there went to 63.80. Nice bounce up to 64.70. So the buyer for the previous 3 days is still there in Qualcomm. We'll keep an eye on that. Dennis, I think Fuzzy's asking if there's any trade imbalance. I think it's NG. Is that the stock here? We got a couple typos in there.
Well, NG is natural gas, so that's not a stock. NGG is a stock, maybe. Or actually, NG is a stock. It's Nova Gold, too. But
that much, yeah.
NGG, National Grid, just NGG, if you want to know that one's $2,900 to sell.
Not
so there's
much.
Really not much there at all.
All right.
And Nova Gold is, I believe, an Amex stock, so it's not going to publish imbalances yet.
All right. S&Ps are just hanging out here. 71.50. That was your low on Friday. Your low right now, 71.25 here. Another thing, Dennis, that I wanted to bring up to you, I was looking at the weekly range. I like to do my daily and weekly numbers, and your entire weekly range was traded on Thursday. I mean, you have to include the Globex session in that. So you had a low of 63.25. Then earlier that day, you hit 94.50. That was in the pre-market trading. So volatility is starting to creep back. That was one thing that Todd mentioned here. Before we get a big crack, you got to get that Dyson, right? You got to get the up and down. And I think you kind of had some of that trading action exhibited on Thursday here. So interesting point for the market. I
mean, it's back up to 12, but you're really in when you put in a context,
low.
VIX 9, VIX 10, VIX 11, VIX 12. We are in a low vol environment. I know we've seen a little expanded range in the S&P, an 8-point, 10-point range. Hey, I'll take it over these 3-point ranges there, but it's still nothing like the 30-point ranges we used to have, like Todd was talking about. Those are the trading days when you get the S&Ps down, trading down 30 points and rallying all the way back up and trading down. And we're so far removed from that. It's going to take some type of political or some type of macro event to, I think, really get the volatility back into this market.
All right. Ernie?
Qualcomm just rallied from 63.75 in the last 5 minutes up to 65.5 now. So one individual volatility you got in QCOM right now.
Yeah, and that's 64. If you're just sticking your neck out there, you have a decent trade. Let's look. I mean, obviously, they think there's still some meat on the bone here.
Oh, yeah.
I mean, if they'll come back with a higher bid.
They're going to get a better price, or they wouldn't be rejecting it. So, investors are betting with them right now because we can see Qualcomm trading up in the pre-market. So at least investors are trying to bet with them right now. A lot of risk. I'm just looking risk return up here, and it's more like a sit on hands trade for me because nothing materializes over the next little while. It could be back 55. It could get another bid and go to 75 or 80. So, it's really kind of a coin flip for me here, and I don't like making trades on
65.79. That's been the highest level that you've traded at since this deal was rumored. Well under 70. Just got into the 65 handle here. Friday's high was 65.33. Earnings from Tyson Chicken. Why don't we do that with a minute to go? We can.
Stock's been a monster. Give us the number, Spencer.
$1.43 is a 5-cent beat. $1.38 was the estimate. Sales of $10.15 billion versus a $9.89 billion estimate. So they beat on the earnings and the EPS, and they beat on the sales. Their fiscal year adjusted EPS is coming in line with the estimate. $5.81 was the estimate. $5.70 to $5.85. So they're right in line with their fiscal year EPS guidance.
It's got to be the best food stock out there. No? Look at since 2012. This was $20 in 2012. It's now $74. You can look at any other food stock chart, and almost all of them in the last 5 years, some of them are up 10, 15%, but nothing like the Tyson Foods, which is up over 300% here in 5 years. So this has definitely been one of the best food stocks going forward. It's flirting with, it's going to flirt with the all-time high here, I think, today, too. Did it flirt with it already?
Yeah, that former all-time high was at 77.05. We got up in the pre-market real quickly. We got up to 77.43, and then someone came in with a piece at 77 after they realized that 77.05 was the former all-time high. You have pulled back, so see what happens at that 77.05. I guess that Eat More Chicken commercial. What's that, for Chick-fil-A or whatever? I think that's what people been doing here. Just keep an eye on that. If it starts to go into reverse and you're having a short on this, maybe you'd love to see yesterday's close of 74.14. I had a couple highs at the $74 area, so perhaps that former resistance will be new support. Dennis, anything you want to add?
Quick imbalance look here before BABA, 173,000 to buy after singles day. GE, which has leaked the gains almost back down to flat here now, 133,000 to buy in GE. Overhead supply is the name of the game there, though. Ford, 151,000 to sell. Ford's been leaking here as well. Square, no value. Look at Square. Nothing happened in Square. 11,000 only to sell. So quiet day. Bank of America, 189,000 to sell. Morgan Stanley, 41,000 to sell. Citigroup, 61,000 to sell. JP Morgan, 53,000 to sell. If you're looking for a theme here today, financials are weak. The TLT is much higher, or quite a bit higher here. That never helps the financials there. And financials taking on the chin a little bit this morning.
All right. Reset of Friday's trading action. Friday's low in the Globex session, 71.5. We're kind of hanging out here. So we need to find this support here and rally back up into the 80 handle. Keep an eye on the close at 79.50. What else you got, Spencer?
Nope, that's all I had for the day. But I just wanted to thank everyone who tuned in to our chat at premarket.benzinga.com. If you missed any part of the show, you can catch it again on our podcast on iTunes, SoundCloud, and on Stitcher, or just go to youtube.com/Benzinga TV. Once again, thank you to Todd Gordon for joining us this morning. Excuse me. Todd was great. And on tomorrow's show, we're joined by Nick Shaheen of Create Income with Option Spreads. But that's it for us today, folks. Have a good rest of your day. Hope you have a good morning so far. We'll be back with you on Tuesday.